Well, hello everyone, and welcome to Friday, the 12th of July, 2024. I am Delbridge, Benchmark Realty, Murfreesboro, Tennessee. Let's try to keep this show as short as possible, and let's get to it. If you like this content, please go to CallDelToSell.com, find the tab that says on YouTube, click it, and it'll open up a page of QR codes. There you can use a smartphone to scan and get to the YouTube page, or you can just mouse over and click it on a PC. There you'll be able to subscribe to this little button over here and click the notification bell so that YouTube will notify you when each Friday's blog has been uploaded. Thank you. All right, what does the news have for us today? Because we had some report on inflation and people got all excited about it, and the apologists jumped in there and said, see, we're on track for lowering rates. And we've heard that all year, while some of us have said, not so fast, big boy. It doesn't really look like that's in the cards just yet. What did Chairman Powell say? Chairman Powell said, if everything holds according to plan, if we continue to see the rate of inflation decline, he kept putting a lot of qualifiers on it, dangle that little dollar out there like the fisherman on that insurance commercial, not quick enough, not quick enough. And people fell along that lines of expectations rather than listening to the words that actually came out of the chairman's mouth. And the chairman's not alone. He has the other bank presidents that are there with him, feeding him the information. In fact, we need to look at a beige book pretty soon, because we haven't seen one recently, to see what's going on in the various districts. But no, he's not indicating that September is a lock. But when we look at what CNN, what do we expect out of CNBC rather? They're pretty well much on the line, but they can be quite optimistic, we will say. And it does say quite plainly here, inflation falls 0.1%. Could it have fallen any less and still made it into the report? Do we report numbers that are any smaller increments than 0.1%? I mean, that's what we want to look at, right? We don't do 0.05%. We only do 0.1%. So could it have fallen less? Did we round that up to get at that 0.1%? Anyway, that's not striking me as being a great and exciting what can we say, report that it fell 0.1%. Okay? Powell says he wants to see we're on a steady path. Stock market today, stocks fall from records as Tesla and Nvidia lead tech sell-off. So somebody's getting a little bit excited about the tech stocks. I think they were in a bit of a bubble, quite honestly. I think Tesla, they have their hands full as the entire battery electric vehicle market has collapsed underneath them as people tried them and realized they were really being kind of led down the primrose path with being good for the environment and all that stuff. And people tried them, and basically they said, no, we don't want them. In fact, 47% it was, people who bought them wish that they didn't buy one, that they'd go back to ICE if they had a chance. And so that's a reality. So Tesla's having struggles. Fisker, many of the others, as you know, are having terrible time. Nvidia is a company, now they've been in the news here just recently. A lot of the computer stuff, which I may touch on in a home and land post here this weekend. So I think tech has been in a bubble. I think AI has helped keep it in a bubble, and I think it's kind of bursting on them. But normally, stock market, here it is, stock market, why tech stocks fell. We can look at that. Inflation showed more than expected in June, right? As prices fell, rents rose. And I want you to notice that rents rose, or renters equivalent of a mortgage type thing, what we're doing when it talks about the CPI. Dow Jones, NASDAQ's rise despite inflation surprise. It was expecting a little higher, and it came in 1/10 below. Banks mostly lower. Now we can probably look at that Investor Business Daily. The U.S. economy today, higher wholesale inflation rises in June. Do you see the whole mixed bag of stuff that we're getting into right now? You see the usual suspects wanting to say, yes, inflation is down 0.1% when we expected it higher. September, here we come. We want our rate cut because we went down the smallest measurable amount in a month. And so that means we're definitely going to get a lock in September. Some people are saying that. I'm not one of them. I'm noticing that housing prices are still rising. But let's look what the stock market thinks about it. Historically speaking, what we look at is the stock market usually goes up when it anticipates a cut in rates or freer money, cheaper, freer money. Because what they're looking at is they can use that, they can invest that, they can leverage that more easily if they have lower payments to pay the money back in some form or another. So if the stock market went down, to me that tells me that those financial geniuses in that market are smart enough to see, no, it doesn't look like we're going to get a rate cut anytime soon. Because yeah, it may have been down 0.1%, but it wasn't much, and it's just 1 month, and it's still shaky. We're not getting quite our expectation. And most of all, when we look at it, what's going on? Well, what's going on is we saw in this tab that the wholesale prices actually went higher, which means that is a leading indicator. So if the wholesale inflation rises, that means it's going to take probably a little bit of time for that wholesale price in June to may show up July. This is not an instantaneous thing. That, of course, is why the Fed chair has been saying he's not going to budge until he's convinced, till the committee is convinced that inflation is truly on the right direction. Well, let's take a look at one more thing here. Let me refresh this screen, get that up toward the top and show it to you. Google housing prices June, right? Because we can't tell July. July's not quite here yet. It's here, but we don't have July's numbers. So what happened in June? U.S. home prices hit another all-time high. So 0.1% is not convincing me. I doubt it'll convince Chairman Powell that inflation is really dropping when a good percentage of the CPI is housing, a little lesser percent in the PCE, which is what the Fed uses. But housing or renter's equivalent is still all based upon housing, and it's going up, not down. So I'm not getting the trend and this definite belief that we're going to see a lowering rate. And if we did see a little bit of a lower rate, remember it's only going to be 0.25%. So Chairman Powell has kind of intimated. Well, let's look back at that right there. And this particular CBC, this is from Canada, just 2 hours ago. They apparently had some rate cuts. Fewer home sales and lower average housing prices in Canada compared to a year ago. Yet, go down to global news the results are in. June's rate cut did not revise Canada's housing market. So what is that telling us? If a little bit of a rate cut didn't spark great growth in Canada, why would we believe that it's going to have some magic cure-all, end-all in the USA if we were to get that 0.25 point, say in September? I'm not trying to harsh your mellow by any means. I'm just trying to show you something. It matters who you listen to. You need both sides of a coin to see what the coin looks like, the heads and the tails. And 0.1% coming a little lower than we expected isn't great if the wholesale prices were going up. If they're going up and the lagging indicator, the PCE or the CPIs, if they're showing a little bit down, that's only because it takes a while to produce something in its cost to get to the consumer. And we're seeing housing pricing staying high. So what does that mean? Are we depressed yet? We shouldn't be. We just realize that there's a lot of noise in the marketplace. The stock market doesn't believe that rates are going to go down soon. I don't personally believe rates are going down soon. We could look at a lot of different things and see the same cards. There might be a king or a queen in there, but there's a lot of trash on the table. So, I wouldn't place a bet on September just yet. All right, so what do you say we wrap this show up?
Hello, I'm Delbridge of Benchmark Realty, Murfreesboro, Tennessee. If you are currently unrepresented and would like to know how to compare up to 3 properties side by side and room by room, then go over to my new YouTube channel, CallDelToSell. That's 1 L and Del, no spaces. Watch the demo on Real Scout, and then call me and we'll set up your exclusive ad-free account today.
Okay, I hope I didn't sound too circular in my speak. We opened with that 0.1%. Yes, inflation was down a little lower than they expected, but it's just barely on the negative side. Powell has reiterated multiple times that he's not going to change the target rate until they are convinced inflation is under control. And to counter the concept of inflation being under control, we see the housing prices are still rising. They're still rising, which means that that's going to contribute to inflation. It's also going to make it harder for a home buyer to buy. It's pretty good news for sellers because we also see that the market, we're still selling. But the Canada reference shows that they've already gotten a little bit of a cut, and it didn't have a great magic wand effect over the housing. So it's not going to be a great thing if we see a cut in September, in my opinion, and it's not going to be a bad thing if we see a cut in September. 0.25% cut is not a big deal. It's what if we start seeing a bunch of them in a row? That's generally the sign that recession is on the way, and they're trying to pump some money into the economy before it does crash, like it's overcorrected. And I think Powell and the committee are just going really, really slow. In fact, I don't know that we're ever going to go back to the old rates. I didn't put it in the show because we're long enough, but Powell also said just recently, we're not going back to the super low mortgage rates, or not mortgage rates, the super low Fed rates. We're not going back to low rates. It's just not going to happen. We just need to listen to what people are saying and not just hear what we want to hear. So let's get our numbers in here for last week, 7/5 of 24. We had 21,717 in the opportunities. That fell slightly over the previous week. We had 42,65 in the under contract still showing. That fell a little bit over the previous week, and the ratio remained steady at 20%. This week, 7/12 of 24, we had 22,164 in the opportunities. That is up a slight bit. 4330 were the under contract still showing. That's also up a slight bit. And the integer ratio remained unchanged for the third week in a row at 20%, or 1 to 5, however you want to look at it. Yet, I think we can calm ourselves. We can cool our jets. I think the economy is going to turn one way or the other. It's going to continue to be a little on the sluggish side. It's not going to happen overnight. I wouldn't panic about that. I personally don't panic about that. But at the same time, you got to learn to filter. If you're not already doing it, you've got to learn to filter out those everything's great type people, because it took us a while to get into this mess. It'll take us a while to get out of this mess. We're still buying houses. We're still selling houses. Families are still growing. People are still, needing a bigger house. People are retiring and needing maybe a downside. It's all still going. It's just happening at a little slower rate because of the cost of money. But when those cuts come, they need to come very, very slowly, or else that's going to be a sign that we have bigger trouble than interest rates at that point in time. So we appreciate you watching. Stay tuned later this week. I may push something out there on home and land that will deal with how I got 10% more performance out of this old beast of a machine that I produce videos with. Appreciate you watching. Come back next week if you will.